Hello, thank you for joining. Wow, what a nice beat today. Well, we have a lot to talk about right now. This is really impressive beat. Let me go ahead and show you guys what's going on with the stock. You guys already know. Right now, I hope everyone's doing good. I think Clover is one of the only stocks that are green on the market. I think Upstart had a beat too, and they went in and they're down, I think, 40% right now. If we were to take a look at I mean, just look at the Upstart drop. I mean, holy moly, guys, this is impressive. So, the we are up, I think, around 20%. We broke past the upper VWAP, and right now we're testing below the simple moving averages of the minute. We are getting a reversal here, but I think it should repaint. So we're going to see right now how the earnings report are going to play out, but we're going to go over really quickly. Essentially go over what we were expecting, what were the results, go over the cash burn, how much cash they have, and go over this chart really quickly, and then and then we're gonna look at the earnings. So here they report, and we're gonna live stream it. Just let me know if you guys can hear me clearly. So I want to make sure everything's in check. Also, if you can, please share this on StockTwits. Spread the word. I'm very excited for this stock. We've been covering the stock when no one wants to cover it. Everyone gave up on the stock, almost everybody. And we've been, working hard, trying to shed light on this stock. Clover is a really good one. They're working hard here, and it's very clear. Okay. All right. So let's go ahead and take a look at the analyst expectations. Okay. So analysts were expecting for Q1 of 2022 revenue, they were estimating $787 million. Also, the EPS revenue estimates was negative 0.27. Now, I need to take a look at what they were now. I don't know if they've released that yet, or we might have to calculate it. But what we know is that we got a beat by $86 million because Clover has a revenue of $874.35 million. Okay, guys, this is amazing, right? And just so for people don't understand this chart here, what we can do is we could just go to Google to simplify things here, and we can see this huge erection, right? Erection is a good word, I think, for this, right? This is a very strong one here, okay? And right. And we're up 20% right now. And I think we are doing way better than BHG. And this is in a bad market. Imagine if this was a risk on day. Okay. Imagine if this was a risk on day, what would happen? Okay. So, yeah. And also, I think I need to stop making videos because every time I make a video, somebody on Reddit said the stock drops, right? So I think I need to, right? I'm so erect. Exactly. I don't know, man. I mean, if you don't call this an erection, I don't know what the hell is this, right? Right? It's huge. Okay. So this is great. So with this, we got a 336% beat. I mean, you show me in the market right now, show me a stock that is giving you a 336% beat year over year. I don't see it, right? And the cool part is, I looked at this earlier on when they applied direct contracting, and I did a slope analysis, and I was like, okay, no one's looking at this stock, which is why we went ahead and we're reporting on it, and it became one of my top 1 positions. So if you look at the revenue expectation for the year, they're going to hover around $3 billion to $3.4 billion. Now, again, my calculations were for $3 billion, so I always like to underestimate, right? The insurance members is expected to average around 84,000 to 85,000, which is a growth rate of 26 to 27% as compared to 2021 average. Their insurance MCR is expected to be in the range of 95 to 99%. And we're going to go into that within their data. Also, some coronavirus costs decreased as the COVID-19 measures start to wane. And this is really great. So now we're going to go ahead and go to their release here, and just briefly see if I missed anything. So again, $874 million as compared to the $200 million from first quarter of 2021. That's a over 300% increase, right? As we saw, lives under Clover management grew 257,000 from 66,000 year over year. First quarter Medicare Advantage MCR was at 96.4%, and non-insurance direct contracting MCR was 99.8%. This shows significant improvement quarter over quarter. Again, like I stated, the revenue is going to go from $3 billion to $3.4 billion. So Clover continues to expect 2022 insurance MCR of 95 to 99% and further stepwise improvement and beyond. So you have a company that says something and then they don't have the results. Then you have another company like Clover that says something and that it gets the results. Okay? So let me tell you something. Palantir said that they're going to expect a revenue of 470, 480 million. Oh, nope. They got 440, 450, whatever it was today. Right? You got companies that walk they talk what they walk, and you have other companies that are just, unfortunately just not there. Right? This reminds me like Tesla. They say they're going to do something and they're going to do it. And Andrew Toy, God bless his heart, very wonderful, wonderful man. He always compares the software of Clover Assistant like a software of cars, right? Like the Tesla, right? And what they're trying to do is they're trying to create a company that likes to underestimate but over deliver. Okay. So now we're going to go in and let's take a look at these numbers really quickly. So Q1 of 2021, we had $200 million, now $874 million. Q1 of 2021, we had 107%, almost 108% in insurance MCR. Now we're at 96.4%. For non-insurance, we don't have that data. It's at 99. For the salaries and benefits, again, it's increased because of the people that they hired. Again, the business is growing. Now for the operating expenses, non-GAAP, it definitely is increased. But for the net loss, and this is where a lot of questions, I've been getting a lot of questions. Al, are they going to have enough money for the future? Are they going to dilute? What are they going to do? So to answer that question is, well, look at this. They lost around $75 million this quarter. This quarter, they lost $75 million, okay? And it's increased the loss so let's calculate the loss based off of year over year, okay? And this is with COVID going down. So I assume the losses will be mitigated more further to the downside, but let's just go ahead and calculate that. So we have 75 minus 48 is 27. We're looking at my apologies, I did the calculation wrong. An increase. Let me do the calculation here. I'm doing this live, literally. So, yeah. So we definitely have a almost 56% increases that in the loss year over year. However, if you take, let's say 75, and if let's say we were to multiply it by 4, we're looking at $300. Now, assuming, let's just make it even worse. Let's make it 125 times 4. We're at $500 million in loss, right? Assuming, let's say they're losing $125 million per quarter. We know they didn't do that. They lost $75 million. I'm adding more to it. So that means, let's assume they're going to lose $500 million this year. Okay. So we go down. Oh yeah, divide. I agree, Ron. We go down here and we go down to their cash. And here it is. The cash and cash equivalents, they got $722 million, which means that even if they lose $125 million, we have enough cash for this year. Okay. We don't need to dilute this year. Okay. Now, if it's true And if they achieve profitability by 2023, then they won't need to dilute. I need another more quarter to look at the growth rate for the net loss. But if it's hovering around $75 million times 4, that's only $300 million. That means they're going to have approximately $400 million left in cash. Okay. Again, they only decreased around 70 million. They had $791 million in cash. Now they have 722. But look at their assets. Their assets went from $1 million almost to 2.6 million. Okay. So this is looking pretty damn good. The only thing I see, the liabilities has increased. The total liabilities, which I need to understand why has the total liabilities increased. What, that means that's money that they owe. So what's going on with that? Have they increased? Are they going to be increasing cash reserves and borrowing money instead of diluting shareholders? Which kind of makes sense. If you're expecting profitability 2023, might as well get some debt. Personally, I don't like that, but hey, it protects the shareholder, but interest rates are going up. So we're going to see what's going on with the earnings report. Okay. So now let's go back up because I did skip down here. Let's go back up and keep analyzing, shall we? So the insurance members, wait, let me see if I don't want to miss anything. Okay. Adjusted EBITDA has improved now by a lot, but I want to see better improvements on the adjusted EBITDA. I want to see a new, no offense to the current assistant chief financial officer, but I would like to see a permanent one. They talk about the COVID-19 measures here, but March 31st of 2021, they have 66,000 members. Now they have 85,000 members for the insurance members. The non-insurance beneficiaries, so total lives under management went from 66,000 to 257,000. Let's go ahead and take a look at here. So lives under the Clover assistant management grew 550% year over year. I'm going to repeat that again. Lives under the Clover assistant management grew 550% year over year. Okay. And let's see here, whatever we can break down. So these are the financial outlooks very quick here. They're expecting revenue for 2022 from anywhere between 3 billion to 3.4 billion. Insurance, yes, we already talked about this, 26 to 27% growth rates. We talked about this right around here, right there. I pulled that information out from there. 95. So we already talked about this. Let's see here. Okay, this is a good one. Okay, so Southern New Jersey has an MCR of 120 versus Northern New Jersey has an MCR of 99%. So what that tells me from a sociological perspective, it shows me that there is some social stratifications where the socioeconomic status of Southern New Jersey is a lot worse than Northern New Jersey. So in layman's terms, there are more poor people, unfortunately, in the Southern region. And that's what I'm getting from the data. Correct me from any healthcare providers. Correct me if I'm reading this wrong. 99% from this in the Northern region, the area that has a better MCR, their member weight in terms of the market share that they have in that area is 67% versus the 22% in Southern New Jersey, meaning that they're more exposed to the better MCR than the Southern region of the MCR. We also see Georgia's 99 and others are 103. So based off of this, what this tells me in comparison to Bright Healthcare Group, it shows me that Clover Health is very strategic with their analysis. They're strategic about which markets to over leverage themselves in order to secure a satisfactory MCR until they're profitable. And then they can go ahead and take some risks even more to help the have-nots of our society. Okay, so that summarizes the main highlighted points here. We hit the cash, and so we got the increase in claims here, which makes sense. They've gotten bigger. Net loss, again, is increased. Well, because we're about to start, we got less than 10 minutes. Let's see. Let's go to the questions here. All right. So Clove after hours is rising. Oh yeah, no, definitely. Well, it's a beautiful, beautiful. And now we have the MACD resetting. Hopefully, curls back up. RSI is about to go and bounce. Probably, it's hopefully going to bounce off of the upper VWAP line here, but looks like it's breaking. So we'll see right now what happens then. Let's see, looking good so far. Hopefully, more good news to come. Hopefully, maybe there might be some SaaS here, but honestly, I don't see too much of the Clover Assistant talk here. Yes, this year we'll continue investing in Clover Assistant to deliver data-driven, value-based care and rounding up. Yeah, so it looks like the assistant is what's helping them uh, get to a position where the MCR is very adequate and ill comparison when you compare it to other uh, um, incumbent companies that have been around for a while. Okay, so looking forward to this amazing Q1. I mean, amazing. I mean, you please tell me a company that's here. Let me go to my private Discord channel. Let's go to our heat map right now, and let's just kind of see what's good in the market right now. So right now the only thing we have a sea of red, and the only thing is going to be consumer defense, right? Or sorry, no. Discount stores. Energy is sadly. I mean, look, just look at energy's down. Oh, would you look at that? Healthcare. Again, as I told you, in very recessionary times, we have the best stocks to be in would be in real estate, which is unfortunately overvalued right now. Yep, too late. And healthcare and insurances, because people can't cut their insurance. All right, really quickly before the earnings report starts, I want to just make sure I get some information out there really quickly. So this is the smart money, dumb money. So I get data from institutions, which helps guide my investment thesis. As you can see, this is the SPX. It's on the downturn right now. Here is smart money versus dumb money. Smart money is blue, dumb money is red, dumb money is retail. As you can see, dumb money is selling, retail is selling, while smart money is starting to engage back into the stock market. More so institutions, some of them have been pulling back. But as you can see right now, we do see dumb money starting to sell, indicating there could be more downturn in the market. Smart money is starting to increase. Okay. Let's see here. We do see a PE ratio plunging, meaning that we do see a PE ratio compression. That's why a lot of the tech companies are starting to be compressed from their overvalued rates. We saw it first with Peloton, then Netflix, and now Palantir. Well, guess what with Clover Health, guys? It's a tech stock, but they're treating it like an insurance stock, just an insurance. Its PE, its price to sales, or its revenue multiples trading at a 1 or 1.4. We're good on that, right? Okay. Want to make sure I only got a couple minutes here. I want to make sure we got this. Every time we've had such a PE decline of greater than 35%, if you look at the year returns afterwards, the median year return is approximately 26%, meaning that this could be the worst case, or the base case is a bear market, right? Based off of the indicators that I have, which I pay a lot of money for, it's indicating to me that our recession model says that there is no incoming recession based off of the technicals. However, there is a risk warning, a signal that we had risk off, hence why we've been down. But if you look at the overall long-term trend analysis, we do expect a positive 11.3% return based off of the model. It's not signifying any bearish trends. However, it is crossing down below this the slope negative, indicating that we may be entering a bear market, but it doesn't seem like we are going into a recession, which makes sense to me because it seems the Biden administration and the federal chairman, Jerome Powell, are trying to push that off. So just to get some economic projections and analysis within our earnings report so we understand the global context of what's happening right now in the market. Clover is doing great. I don't see a company winning this much, especially revenue year over year of over 300%. Okay. So now let's go ahead and remove this. And I'm gonna stop at you, Irish, right here, and then I'm gonna go down later. We're gonna go ahead and open up this earnings report. Okay. All right. So I have it here. As soon as it starts playing, I'm going to be able to remove it and put it in the sound so you guys can hear. But I do want to go over some comments really quickly here. Revenue beat, but I still see other revenues. Is the SaaS? I do see them saying other non-insurance. I don't know what that non-insurance means. They could just toss in the $40 million in SaaS within the conference call. They didn't state it on the earnings report. I don't know. It could be not. Regardless, the SaaS thesis is coming in fruition. It is on the business plan, and we talked about it on the video that I have regarding the SaaS. They did put it in the earnings report or the investor presentation regarding the SaaS outcome. In fact, we can just look it up here really quickly while we're waiting here for them to open up the earnings presentation. As you can see here, guys, this is the Clover investment case. You can see here, Clover Assistant also has an opportunity to increase lives under management via long-term SaaS. Okay, so it is on the table. And if they're already growing like this, and this is without a SaaS, holy freaking moly, right? All right. Okay, I hear him. Oh, never mind. It went back to music. I'll let you know immediately. If I hear him open it up, we'll go straight to the sound. So let's see here. Good evening. Like to more people to see. Oh, by the way, guys, if you're enjoying this, please give this video a like. It really helps with the YouTube algorithm, and it also helps push this video out to other investors that may not know this stock. No one's talking about this stock, and I just want people to learn about it. And the more people know about it, we're going to win, right? We need to come together. So if you like the video, please consider subscribing and also liking. That's a big one. Very weak institutional interest the last 2 quarters. Well, they did buy a lot. In fact, in our private Discord channel, if you look up in stock research, we should see under institutions. Let's see if we can get anything here. One moment here. Let's look up institutions. So they just told us to stand by, so they haven't started it yet. So as you can see here, very weak institutional ownership. Actually, ownership in the past 6 months has increased by 36.7%. This is all directly from our private Discord channel. And that's very bullish. They own about 130% of the shares. There's approximately 470 shares. So if you take 130 divided by 470, it's approximately around 27 to 28% of share ownership. Okay, so there's that. Listen perfectly. Oh my God, I saw after hours. We did it, didn't we? No, this is, I hope so. I hope so. Careful. Yeah. Finally, good news. This market sucks. Absolutely. This is the best gym music, Al. I love it. Green in erection. Strong erection. That should be the on Twitter, the hashtag Clover Health number erection. And they help treat with you and pay for that if you have some problems with it too, I assume. Woody, do we know the MCR? Yes, so it did say it. It's between 95 and to 99%. And they break it down here for us, not, right there. The revenue is huge. Or clarify, please. Oh, I love it. I love it. I love it. Let's see here. DCMCR 99%. Oh my God, is happening. Oh yes, MCR. This is, guys, listen. This is what happens when you do fundamental analysis. This is the whole point of what we try to preach at Al Stock Trades. Utilizing a Warren Buffett type analysis and doing an intrinsic value calculation, you win, right? Especially if you use some common sense, right? Is this business going to be around, right? Divide. I got to remember how to do that. The Clover Health said, hell yeah, hello. 48,200,000 versus. I hope so. It's the SaaS. I do hope they mention it. It's going to send the stock higher. If not, no worries. It's coming. We know it's coming based off of the investor presentation, which is right here, the long-term SaaS. Right here, guys. Right there. Long-term SaaS. It is coming. Okay, they said they're going to begin in 1 minute. So let me just look up the comments here really quickly. Oh yeah, I'm glad too. Hell yeah. Don't they need some cash on hands for claims? So they do have some, and they're also getting reimbursed as well. The way the Medicaid works, and sorry, Medicare, 6.6 billion, looking sexy. Look at both the assets and liabilities. It makes it neutral. Yeah, I saw that. And they need to discuss what's going on with that. I need to double up. They appointed him today. Oh, you're saying CFO or CEO? Should pronounce the division CEO of value-based care. Oh, wow. Can you put the link? Incredible Lives Under Growth, 110 viewers. Now, yeah, that was impressive. I'm glad that you guys are all joining in here today. We've been talking about Clover for the longest time, and it's really nice to see some good news. But they've been giving us good news from the beginning. Nothing's changed. They're growing. North is closer to New York. Lots of money. Makes sense. South is all farmers. Makes sense. And I'm glad they're servicing both. Still no social spike on Clove. Interesting. What about SaaS? Well, we'll see right now. We'll see what happens. All right, we're standing. They're about to start. Okay, so let me go here. All right, we're about to start.
Participants are in a listen-only mode. A question and answer session will follow the prepared remarks. At that time, if you wish to ask a question, please press star 1 on your telephone keypad.
Please let me know if you hear it. Please let me know if you hear it.
Today's call is being recorded. I would now like to turn the call over to Derek Newman, Head of Investor Relations and Corporate Strategy for Clover Health. Please go ahead.
Good afternoon, everyone. Joining me on the call today is our CEO, Vivek Garipalli, our President, Andrew Toy, and our interim CFO, Mark Herbers. We will discuss first quarter results and answer your questions. This call is being recorded. Before we get started, I would like to remind you that our first quarter's earnings materials, including the release, are available on our website at cloverhealth.com. I'd also like to caution you that we may make forward-looking statements during today's call that are subject to risk and uncertainties, including expectations about future performance. Factors that may cause actual results to differ materially from expectations are detailed in our SEC filings, including in the risk factors section of our most recent annual report on Form 10-K and in our other SEC filings. Information about non-GAAP financial measures referenced, including the reconciliation of those measures to GAAP measures, can be found in earnings materials available on our website. Lastly, I want to note we updated the names of our Medicare Advantage and direct contracting segments to our insurance and non-insurance segments, respectively. We believe that this better reflects each segment's current role and contribution to our business. There has been no change to the existing composition of these segments, and previously reported financial results were not impacted by these changes. Finally, direct contracting will be known as ACO REACH starting next year, and will fall into our non-insurance segment. With that, let me now turn over the call to Vivek.
Thanks, Derek, and thanks everyone for joining us today. We are really excited about Clover's start to 2022 and the groundwork we're laying for 2023 and beyond. We believe we can deliver growth well above industry averages, deliver improving margins, and ultimately generate significant positive free cash flow. Let me now cover some highlights from this quarter before handing it over to Andrew for a more in-depth discussion. Leading off, our Q1 revenue grew significantly to $874 million, while operating expense growth slowed. Both our insurance MCR and non-insurance MCR improved significantly versus the fourth quarter to 96.4% and 99.8% respectively. And the Clover Assistant continues to be a differentiator, showing an insurance MCR differential of over 1,000 basis points for returning members whose PCPs use the Clover Assistant versus those who don't. With that, let me turn the call over to Andrew.
Thanks, Vivek. I'm also very pleased with our results in Q1 and cautiously optimistic around the rest of 2022. It is early in the year, and we don't want to get ahead of ourselves, particularly given our rapid growth and the unknowns surrounding COVID-19. Therefore, we are maintaining some conservatism as we need more data points before we change any of our expectations. Our key areas of focus right now are on continuing to build an intelligent, sustainable, and efficient growth model, investing in the Clover Assistant to deliver data-driven, value-based care, and rounding out our leadership team with top-level talent. We believe these efforts will benefit 2023 by driving further improvements across insurance MCR, positive contribution from our non-insurance business, and a more efficient operating structure. In short, we believe there are multiple levers we can pull to drive margin improvements while maintaining above industry average growth rates. As mentioned earlier, we delivered strong top-line revenue growth to begin 2022, powered by our technology-driven approach, PPO-first plan strategy, and wide inclusive networks. Our year-over-year insurance growth demonstrates the moat our PPO product has created in the market by pairing affordability with choice. Our non-insurance beneficiary growth of 179% since last quarter demonstrates our differentiated ability provided by the Clover Assistant to bring more doctors into value-based care. In our insurance business, we are focused on continuing to execute our mission of serving our members with high-quality care across a wide network, while also balancing intelligent adjustments to benefits and network design to drive nearer-term efficiencies. One item worth highlighting is our differing MCRs by region. Maturing markets, such as counties that we refer to as our Northern New Jersey region, and newer growth markets, such as Georgia, have significantly better dynamics than more challenging markets, such as counties that we refer to as our Southern New Jersey region. We are currently working on measures to achieve solid gross margins across all segments, and we plan to share more specifics on the next several earnings calls around the actions we are taking that we believe will drive another stepwise improvement in 2023 MA MCR. In our non-insurance business, there is a similar dynamic of balancing growth and margin. We are analyzing data and learnings from the first year of the program to strengthen our go-to-market efforts around the providers and regions we target. Our goal for our non-insurance business is, of course, for it to provide a positive margin contribution. We are also working on reducing our operating expenses as a percentage of revenues. You are seeing some results of the initial efforts as operating expense growth is slowing, and we expect year-over-year growth rates to decelerate throughout the remainder of the year. On the technology front, we believe that the Clover Assistant is still in its early innings, with incredible potential to be realized. That said, we are excited about what we've already accomplished: growth in total lives under Clover Assistant management, increased clinician use, and our rapid software iteration cycle. And we've done this across a wide network, which is something most plans can't do. Because of Clover Assistant's untapped potential, We continue to invest heavily in the platform and believe it is a key differentiator, particularly the strong differential in MCR between members whose providers use the Clover Assistant and those who do not. To build on this momentum, we have a roadmap of new capabilities and features designed to further augment its clinical value. We also see a number of ways to increase the reach of the Clover Assistant. Ultimately, we see CA as a way to bring more clinicians into value-based Medicare on both the Medicare Advantage and fee-for-service side. We are continually working on ways for clinicians to use CA for more of their Medicare panels, and the launch of the direct contracting program, which we noted above will transition to the ACO REACH program in 2023, significantly helped with that. Our goal from a CA product standpoint is to allow for total Medicare panel coverage with any given PCP, including those that have never participated in value-based care, and we continue to engineer the business with this in mind. Finally, we strengthened our management team significantly this past quarter. We brought aboard a Chief Technology Officer, General Counsel, and Head of Value-Based Care. We are thrilled by the caliber of talent we've been able to attract and believe these executives will be pivotal to helping us achieve our goals and significant long-term potential. With that, I will now hand it to Mark for the financial update.
Thanks, Andrew. We delivered $874 million in revenue in the first quarter. Our strong year-over-year growth was driven by the large increase in lives under Clover management due to our differentiated capability to participate in both Medicare Advantage and Original Medicare. Moving to medical expenses, our net medical claims incurred for the quarter were $862 million. Our GAAP insurance MCR was 96.4%, down 640 basis points compared to the fourth quarter and within our guidance range. We saw increased COVID-19 costs in January, but there was much less of an impact for the remainder of the quarter. Our non-insurance margin was 99.8%. First quarter non-GAAP adjusted operating expenses were $84.4 million, representing 10% of total revenues. This quarter also included approximately $10 million of broker payments specific to AEP that will not occur in other quarters this year, and headcount is only expected to grow moderately. We also recognized a premium deficiency reserve benefit in the quarter, equating to a non-cash net gain of $27.7 million. Our GAAP net loss for the quarter was $75.3 million. Our adjusted EBITDA loss for the first quarter was $71.8 million. Note that our adjusted EBITDA excluded the $27.7 million of PDR benefit, as this is not reflective of operating results. Our cash equivalents, and investments totaled $723 million as of March 31, 2022. Additionally, in conjunction with earnings, we have filed a universal shelf registration statement on Form S-3 in order to maintain good corporate housekeeping. The S-3 is not yet effective, and we have no current plans to utilize the S-3. Finally, we are maintaining our 2022 guidance. Now let me turn the call over to Vivek for some closing comments.
Thank you, Mark. To wrap up, I wanted to close with some general thoughts. There is market uncertainty for almost every company today. What I believe will matter when we look back in 10 years in terms of whether or not a company in healthcare has a massive market value is if that company did the following. 1, make a massively positive impact by solving real problems. 2, having accomplished that through the creation of a significant technology moat. The key ingredients to those special companies, I believe, will be the following. Number 1, an inspiring and ambitious mission that has been consistent. 2, an entrepreneurial team. And 3, a demonstrated willingness to make hard decisions. When we look at various companies' recent earnings reports, they at best can be described as mixed. Here are some aspects of Clover that make me excited not just about today, but about the near term to medium term. Clover is growing while expanding our technology moat. Our clinical impact is growing materially along the way. Margins are improving. Profitability and the generation of a free cash flow engine are in sight. And on a macro basis, our business is generally agnostic to inflation, economic cycles, commodity prices, and uncertainty around supply chain. We continue to believe that if a number of things fall into place, it is even possible we may be profitable next year on a non-GAAP basis, excluding non-cash expenses and non-recurring expenses. Thank you, and we look forward to updating you more on our efforts as the year progresses. With that, let's take questions.
At this time, if you wish to ask a question, please press star 1 on your telephone keypad. You may remove yourself from the queue by pressing the pound key. In the interest of time, we ask that you please limit yourself to one question and one quick follow-up. We will be taking questions first from Clover's research analysts, followed by the Clover Health community. We will take our first question from Richard Close, Canaccord Genuity.
Yeah, thanks. Congratulations on the progress. I was curious if you guys could talk about the MCR a little bit. I guess you're reiterating guidance of the 95 to 99%. But based on the first quarter results, it seems like you guys are being conservative, which is understandable there. But can you talk a little bit like how it progressed from January to March, just to give us some perspectives there?
Sure, yeah. Thanks, Richard. So obviously, MCR, as you say, has improved, which we're very pleased about, and which we talked about last year that we hope then to see that in 2022. We did have COVID effects, which I think you're alluding to, within the first quarter, more in January and February, and some of those effects obviously went to the economics. All of that's inside that overall MCR that we've seen, and we've decided to take an approach where we're going to look, see what happens. None of us really know what's going to happen with COVID going forward. We hope, however, that even if there are future variants, as we learn how to treat this as a society, more and more of this is now getting baked into how we manage healthcare within the country. So we do believe that our ability to manage the condition, manage the pandemic is stabilizing, and we are therefore comfortable reiterating our guidance around our MCR. So we do see things generally improving. We do think there is a possibility of future sort of like events around variants and things like that. And Q1 did have COVID in it.
Okay. And then with respect to the regional information that you provided for 2021, can you guys talk a little bit about Southern New Jersey? And, I guess that was 120 or something like that. How do you expect to address that? How quickly could you move the needle on that, do you think? Just any details there would be helpful.
Sure, absolutely. So as you're pointing out, our more mature markets do have a lower MCR, and we do think that there's a lot of opportunities for our newer markets, not just South New Jersey, but also Georgia, to look a lot like our mature ones over time. So we do think that's a natural progression of the business. In Southern New Jersey itself, we do plan to be more aggressive in our MCR improvement efforts. We'll have more to share on that, but we have a lot of levers at our disposal around Clover Assistant deployments, around working with our physician partners in Southern New Jersey, around deploying things like our in-home care program within that region. So there are levers that we can deploy there. We do think we can do better over time. And we did want to emphasize as well that we do, all of our MCR is not just one number, but we do see regional differences, and we plan to manage those differences regionally as well.
Okay, thank you. I'll jump back in the queue. Congratulations.
Thank you.
Our next question comes from Jason Cassorla of Citi. Please go ahead.
Great. Thanks for taking my question. Just a quick clarification to start. Of the 211,000 lives under Clover Assistant management, I just want to make sure virtually all of your 172,000 DCE lives are included in that stat. That's correct?
That is correct.
Okay. So I guess just based on my math, it looks like the lives under Clover Assistant Management within your MA book specifically, it looks like it increased from 34,000 in 4Q to 39,000 in 1Q, but it only represented about 46% of total MA members in 1Q versus about half last quarter. So is there anything to call out on that deceleration and penetration there besides just maybe simply higher membership growth to start the year, and you would expect greater Clover Assistant Management penetration within the MA book over the course of 22? Or anything else to call out there would be helpful. Thanks.
Yeah, great question. So definitely, as you framed it, we have quite strong growth, and what will actually happen into those numbers is that we wait to see, claims data, physician data lets us know which PCPs are actually being seen by our members in the various regions we're going. As we expand geographically as well as grow, what that means is that it takes a little while for us to build up that CA user base in those markets. We are actively doing that in all of our markets right now, but there is a bit of a lag as we grow in those markets to see which PCPs we should be targeting. So we feel good about our ability to keep that number moving up and to the right. The total number of CA visits and members who have a CA doctor is increasing year over year, but because we are growing rapidly as a percentage, you might see a little bit of that flattening, but I do believe that we will see that continue to move upwards as we then stabilize and improve in the new regions.
Got it. Okay, that's really helpful. Thank you for that color. And then just as my follow-up here, just given the Clover model and your offerings on the MA side, and in context of the finalized 5% called MA rate increase for 2023 without any risk coding considerations, I guess it'd just be helpful to understand how you're approaching MA bids for 23 and any color on how you're balancing kind of the growth versus profit for next year, kind of in tune with what you were discussing in your prepared remarks. And I guess just in context of your comments last call around the theoretical building blocks to getting close to break-even EBITDA would be helpful.
Yeah, absolutely. So as we said, well, first of all, bids are filed in June, so we'll have more to report on exactly what we bid coming up soon, and we'll be able to talk about that. On the general theme, what we want to do is continue to generate industry-defining and industry-beating growth, but we are now certainly not looking at growing at all costs, right? We want to balance our MCR, balance our operating costs, balance our ability to access the wide network market, which we believe is the product that Medicare eligibles are looking for, alongside the ability to manage those costs within our plans. So we are certainly balancing those two things, as you're pointing out, and we intend to look at the bid as one tool, to look at which markets we enter. We have a tremendous amount of data, both on the DCE, ACO REACH side, as well as within MA, that helps us do that. So you'll see us continue to grow strongly, but you will also see us focus on having nuanced data-driven choices within each of these areas to improve the MCR.
Got it. Thanks. Very helpful. Appreciate the color.
Thank you.
Our next question comes from Whit Mayo of SVB Securities. Please go ahead.
Hey, thanks. I wanted to just go back to the 3,600 users on Clover Assistant in the quarter. I presume the majority of that growth came from DCE. Is there any way to maybe break out what the organic growth was in the MA Clover Assistant users?
Yeah, so we actually don't break out those particular numbers. And the reason we don't break them out is because there is overlap between the doctors that we're signing up for Clover Assistant within both the fee-for-service and the MA population, right? Sometimes there's overlap, sometimes there isn't. It could just be MA, it could just be fee-for-service. But as we discussed on the prepared remarks, our goal is to cover as much of that physician's panel, Medicare panel, as possible going forward. So the way we're really tracking this is number of PCPs who are on Clover Assistant, and that's a number that we have shared. And we might be able to share some breakout between, how many of those are double between MA and fee-for-service. But that's the KPI that we're generally tracking.
Yeah, okay. I mean, we can take it offline. I guess I'm just trying to get a sense if you just normalize for DCE just to see kind of what that number is, because I do fully appreciate the desire not to break out between MA and fee for service. My other question, Andrew, you referenced, I think you were trying to reference Clover Home Care sort of in your comments as a potential trend bender in the southern New Jersey market. Can you just elaborate a little bit more on that, maybe discuss the capabilities so that we have a full appreciation really for that business, number one, and number two, for what you think you can accomplish with that?
Yeah, absolutely. So Clover Home Care is absolutely a key anchor of our strategy. And that's where we are saying that at some point for the multi-chronic, for the multiply comorbid, it does make sense for them to be looked after in their own home. And what we say is we work with the primary care physician. We continue to manage them with Clover Assistant, both with their original PCP and with our home care program. And we transfer them and start looking after them and having regular visits with them in the comfort of their own home. By doing this, we're able to provide more accurate care, more longitudinal care, do things post-discharge after they've unfortunately gone to the hospital, and basically just all around holistically manage them in conjunction with their existing PCP. And all throughout the Clover Assistant platform is coordinating data sharing and coordinating how we actually render care. I'd love to just add in Vivek here, who can add some more commentary on this.
Thanks, Andrew, and great question. So I think one of the really unique aspects of our home-based primary care program is it's direct employees of Clover in terms of the home-based primary care physicians. And what we've seen in the marketplace is when in-network primary care physicians are referring to a home-based primary care program, there's a lot more coordination and collaboration there. So if you take typical markets where some of these complex care centers end up popping up, the enrollment rate of clinical eligibles very rarely goes above 30%. So while there's a MedX impact, you have 70% plus of those that are clinically eligible won't actually enroll in those programs. And there's lots of local market reasons why, and resistance from existing primary care not wanting to lose their patient population to these the quote unquote shiny new centers that are popping up. And that has an influence on patient decisions. When it's actually in a model that's not conflicting with current care, but actually synergistic, home-based, we don't have a technology ceiling, the enrollment rate is much higher. So we're last checked, I think a little bit north of 60% of eligibles, clinical eligibles, are actually enrolled in Clover home-based primary care, obviously the most acute portion of the population, while we're growing at a pretty rapid clip as well. Importantly, and unfortunately, since late March of 2020, we were not able to physically be in the home. And so our home-based primary care program has only been able to go back physically into the home in February of this year. We still maintained and grew the program, but it was wholly virtual. And there's no doubt the clinical impact is much, much lower when we're not able to be in the home. So we do think we're hopefully going to see that impact come back and scale in a lot more effective way than it did prior to COVID. I think one other kind of important thing to add is we just launched in a small way in some initial markets our own wholly owned palliative care program as well. And we'll start to see the positive clinical effects of that over the next couple of years as well.
Okay, thanks guys, appreciate it.
Our next question comes from Kevin Fischbeck of Bank of America. Please go ahead.
Great, thanks. Wanted to follow up on the regional MLR data. I guess, during COVID, you guys have talked a lot about how New Jersey got hit harder from a hospitalization perspective during some of the COVID spikes. It sounded like you viewed the improvement to coming through engagement and maybe repricing, and you didn't really signal out unusual costs, I guess. Are you now of the view that when you look at it for the year, that 120 is a real number, but it needs to be brought down? Or is there any kind of elevated disrupted cost that you think is kind of a natural tailwind to South Jersey?
Yeah, absolutely. So definitely, like as we look at data, this is a place where after getting a full year of data, we can break it out more. It's difficult with the COVID effects, like you said, and that's why we wanted to share it now as part of this particular set of results. We do think that the way that the healthcare is working, the way that COVID effects worked as well within these markets, is that certain regions have a bit of a multiplier effect. So the way that healthcare is delivered in South Jersey makes it be hit a little harder on the COVID front from the admissions, et cetera. Given the population mix over there, like we said, we always serve a more underserved mix, particularly in that market as well, which is all fine. And these are things that we can absolutely manage, but it was a magnifying effect that we got from COVID. So it's a little too early, and we're waiting for data signals to see that as we revert back to hopefully a more normal or a little bit post-COVID world, what the effect will be in South Jersey. But we did want to show that, to your point, like the MedX side of things were different from a different regional basis. And this is something whereby, given how fast we're expanding, given how fast we're growing, it makes sense for us to look at our cohort data in this way and by market and geography as well.
Okay. And I guess since it sounds like getting people engaged with the Clover system is such a big part of the story and the cost control going forward, I want to go back to that kind of growth in the MA lives. In one of your early answers, you made it sound like a lot of that lower penetration is actually coming from new markets. Is that the way to think of it? In the more established markets, the penetration rate's increasing, but it's the new markets where it's bringing down the average. And then I guess any stats to show about kind of, I was of the impression that kind of doing the direct contracting was really going to help accelerate that I would expect to see a higher penetration of MA lives go up because you'd be engaging, doctors in a lot more ways, which means you'd capture more MA patients. So it's a little bit surprising to see it come down, even though you are growing in new markets. It's a little bit surprising to see it come down. So maybe color on that.
Yeah. So definitely makes sense the way you framed it there. So the way to think about that is that all the effects you're saying are there between the synergies between fee-for-service and the MA population within a given doctor's panel. When we have a market, say like Georgia, where we grew a lot in one season, part of that is that we don't go in and just sort of cover Georgia with CA. What we do is we approach doctors who have meaningful numbers of lives and say, look, why don't you work with us on Clover Assistant? And we have very good uptake on that program. There is, however, some lag between because we're growing so quick, say in Georgia, for us to identify which doctors to work with, because we need to pull that data in. And we're getting better and better at that. So what you'll see is we'll go and then our team will look at doctors who have material Clover Assistant lives, who have potential opportunity on the fee-for-service side, and we'll start doing that B2B motion we've talked about, where we go, it's like a sales motion, talk to a doctor, sign them up to UCA. So we feel good that the story resonates well in all markets. It's just that where we have significant sort of percentage year-over-year growth, there's a natural effect where it takes a little longer for us to go identify those docs, get them signed up, get them live, and then they'll move under management. So we feel like we'll be okay there.
Okay, but the penetration did increase in your core markets.
Correct.
All right, great.
Yeah. We're always moving up to the right. Yeah.
Okay, thanks.
Our next question comes from Jonathan Young of Credit Suisse. Please go ahead.
Hi, everyone. It's Nick on for Jonathan today. Thanks for taking the question. Would you mind giving us some color around sort of non-COVID utilization trends exiting the quarter and kind of how you see those progressing for the rest of the year?
Non-COVID utilization trends.
Yes, correct.
Basically what we're seeing, so what we're seeing right now in the index, it's kind of like the reverse form of the COVID question, is it's a little bit difficult for us to deconstellate what is in the COVID trend versus the non-COVID trend, because what we really have is like conditions and procedures done with a COVID diagnosis, for example, in the inpatient setting, or we'll see how many total COVID diagnoses they are, but with the less severe variants now in play. It's unclear whether it's COVID being treated, how much complexity is being added, whether that's really a COVID thing, a non-COVID thing, and whether or not there's any deferred utilization at play, which I think is part of your question as well. So what we've really started to say overall, though, is that what we see in the COVID data is that COVID is still there, right? We think that there's an effect in the, the high single-digit diagnosis rate within our population for any given month we looked at. That said, we don't think all of that care is appropriately flowing through as COVID care, if that makes sense. Oh, by the way, we can hear you typing if you don't mind muting. So basically, we don't classify all of that as COVID care, and the answer is somewhere in between. Generally, the way I would think about it, the way we think about it is, we do believe that COVID is normalizing at this point. We believe at some point the government will remove the extra, 20% surcharges, et cetera, that are being paid for COVID-related procedure care, where there exists a COVID diagnosis, which would be a tailwind for us, because we don't think all of that is necessarily going towards COVID care anymore. And things will stabilize into our overall MCR.
Got it. Thank you. And then I guess just as a follow-up, moving over to OpEx, which looked like it trended lower towards the guided range of 10 to 12%. Can you give us some insight as to what drove it towards the lower end and how we should expect it to trend throughout the rest of the year? Thanks.
Yeah, absolutely. And as Mark mentioned, in that, where we also have loaded a lot of our commissions are front loaded for this year. So we see those built into our Q1 OpEx number that you're citing there as well. Just want to call that out. So we are absolutely focused on the path to profitability. Part of that is to still continue delivering industry-beating growth, which is critical for us, and powered by our wide network model at superior MCRs. And we feel very good about that. And then the third leg of that stool is to also manage and blunt OpEx growth. So you see that we've started to do that. We started looking at that late last year, and we're starting to see those effects flow through now into our actual numbers, and our OpEx rate is slowing. The growth rate is slowing. We have plenty of efficiencies that we believe that we can deliver in this area, given that we've been so focused on growth, setting our differentiation, proving our differentiated model. We think we've achieved all of those things now. So now it's a focus on that path to profitability, and you'll see us talking a lot more about that now and in future earnings.
Great, thank you.
Thank you.
We have a follow-up question from Richard Close of Canaccord Genuity. Your line is open.
Yeah, to talk a little bit more about the Clover Assistant adoption. You guys cited the 2018, 2019, and 2020 MCR data, lower MCR data for patients managed by the physicians using Clover Assistant. How are you using that data? I guess when you go out to talk to physicians, how receptive are they? Do they really dig into it? And just curious thoughts in and around that.
Yeah, thanks. Yes, so we definitely see, as you say, an improvement as physicians use the Clover Assistant more and more. We've shared data there before that cohorts based upon when the physician joined, started using Clover Assistant. The longer they've been using it, the better the MCR improvements. And as per the previous question, we continue. It's a very low churn program. So once people are on it, the satisfaction is quite high. People stay on the program, and we feel good about that. And it's just now about fast following our geographic and membership growth to make sure we sign up those doctors where they're seeing those docs, and we feel good about that as well. When we're talking to our physician partners about the Clover Assistant, I think the key thing is we're all about making sure that we tell them that we're not here to tell them how to practice medicine. We're not here to tie them to medicine by the numbers, which they don't really want to do at all. We're here to make them successful in value-based care. And many of these physicians have dipped their toe in value-based care, but been found it unappealing for a number of different reasons. But we're able to show them with Clover Assistant, we truly want to arm them with data so that they can decide how to deliver better care. We want them to arm them with a personalized care capability so they can customize their clinical protocols to the patient sitting in front of them. The fact that we pay them on a flat basis and not on a moving basis lets them feel like we're not twisting their arm to take any given clinical action, which makes them feel really good. And then we show them that we have more data available to us as the plan than they would have in their own EHR, and that our data platform with Clover Assistant is able to pull in things like whether someone has picked up their medication or compliance sort of like to a given a med, like cost comparison data, all these kinds of things that can let them make better decisions, that whereas their EHR is more seen as like a documentation tool where they're sort of compelled to use it. So all of these things together let us bring physicians into value-based care who otherwise probably wouldn't participate in it and stay more on that fee-for-service chassis. And we're seeing that on the MA side. You're seeing that in our ACO REACH DCE growth as well. Like our market is highly claims aligned because we're able to meet physicians and patients where they are, and they sign up quickly to use CA. So as these motions synergize more and more, we're still only in year 2 of the ACO DCE program after all. We're going to see, I think, a lot of adoption, and we're getting a request now for how can you help us with the entirety of our Medicare panel, and that's something we alluded to, is our ultimate goal is to cover the entirety of a Medicare panel, enable physicians to feel like they can succeed in value-based care with their entire Medicare panel, and that'll be a really great place to be.
Okay, and as a follow-up, with respect to the ACO REACH transition, can you talk a little bit how you guys are thinking about that, how you're positioned to make that transition, any milestones that you have to achieve or whatnot in terms of altering the business you have now to meet the requirements for ACO REACH?
Yeah, good question. So we feel good about our ongoing participation in DCE, which is still cold set, this year, and as it transitions to ACO REACH next year, we're one of the biggest direct contracting entities that'll flow through to us believing we'll be one of the biggest ACOs as well. We have a large amount of data which we can use to intelligently drive our growth and drive decisions being made by our physician partners, which we think will be really fantastic as we look for it to be contributing to profitability. And in terms of the changes that were made to the program by CMS, we're generally supportive of almost all of them, if not all of them. So there are things about greater physician participation on the board, for example, and we think that's a great idea. We're all about physician empowerment. And so most of those changes really are things that we're supportive of, that we can make in our program in a relatively straightforward way. And we think that we're going to be quite successful in the program.
Okay, thank you.
I would now like to return the call to Derek Newman for community questions.
Great, thank you. Our first community question is, are there plans to expand to other states in 22, 23? And if so, which?
I'll jump on this one, Derek. So it's still a bit early for us to share too much publicly in terms of our expansion thinking, but what we can say is just overall strategy is weighted towards going deeper in our existing markets. And that really necessitates a focus on growing the markets that we're currently successful in and where we know we can continue to drive improvements in MCR. And we've grown significantly over the last year. We've got the luxury now of getting more intelligence around our data, a lot of learnings coming from that. And that's going to continue to positively impact MCR as we go into next year as well. And our strategy works best the longer that we're in markets. It allows us to continue to increase clinical impact, decrease churn, and continued increase in Clover Assistant usage. And I think it's always important to remember that while growing, even today, there's about a little over 1,000 basis point differential on MCR for returning members whose PCPs use the Clover Assistant versus those who don't.
Right. Our next community question, anything new about a CFO?
Yeah, so we've been focused on significantly strengthening our management team, and we've made a few announcements around that. Just this quarter, we brought aboard a new chief technology officer, Conrad, who's taking over the CTO role for myself, a new general counsel, Joe Martin, and then we just announced, I think today, our new head of value-based care. Again, emphasizing our focus on the ACO REACH program and the fact that we truly believe that Clover Assistant can help us bring physicians who normally don't participate in value-based care into programs like this. So all of that are significant strengthening of our bench, and we feel great about that. On the CFO front, we're making very good progress, nothing to directly announce there at this time. And our focus is on absolutely getting the right person. And we do have the luxury to be selective here, given our strong finance team and our interim CFO, Mark, who's on the call. So we're making good progress. We'll have more to talk about at a future date.
Okay, our final community question. Do you plan on licensing out Clover Assistant? If so, when? And is there demand for it?
Yeah, so thanks for the question. Nothing to announce at this time, but as I've mentioned previously on the call, our goal is absolutely to cover the entirety of a PCP's Medicare panel and make it easy for them to deliver great data-driven care and be successful in value-based Medicare. And we are actually getting a lot of inquiry from our CA partners around that, because there's no difference between how they care for clinically, folks who are on Medicare, based upon which insurance company or what their form of insurance is, whether they're on MA, Clover MA, fee for service. And so they want to bring all of that together and have a central place that they can manage those capabilities. And, we can provide that with Clover Assistant. So we believe there's a significant opportunity here for us to really play that role with CA for our physician partners, and we're definitely looking at that. There's a huge advantage coming from a Medicare Advantage plan for having built the tool, and now we're looking at ways that we can scale out to other parts of the physician's Medicare panel as well.
Great. Thanks, Andrew. And just to close, while we feel very good about where we are today, there's really great and really hard work being done this year to drive continued progress. And enabling this is the Clover Assistant. It's providing us a growing technology moat while we're making a meaningful and positive impact on health equity along our mission to improve every life. Thank you, everyone, for joining us today.
Thank you.
This concludes today's Clover Health's first quarter 2022 earnings call and webcast. You may disconnect your line at this time. Have a wonderful day.
All right, guys, let me go ahead and close this off here. Okay, well, stick around. We have a lot to talk about really quickly. That last part, I want to just go in right now and talk about it because we need to talk about it. All right, that is a big effing deal. What that last part was. I'm so happy that they answered that Reddit question. Props to whoever asked it. Great. So what that tells you is they're trying to get into that Medicare panel. Okay. They want to basically be able to be the all-in-one program designed for that new ACO, the new CMS healthcare model that is going to lead the whole example on how to treat patients in health equity, right? To basically focus on that, not equality, but equity, right? So that's a big deal. It's like, for example, that picture with the fence they taught us in med school where they have these boxes, correct? And there's different boxes that, everyone deserves an equal place to get equal access to healthcare, especially healthcare. It shouldn't be determined on how much money you have. So that is a huge, huge big deal. So what they want to do is Clover Assistant may be the program that CMS goes to, okay? They talked about how they're talking with their Clover Assistant partners. This is a huge deal. Guys, no one's talking about this on YouTube, okay? No one's talking about this in Analyst. My job is to find stocks that are looking like the diamond in the rough, all right? That's what I've been doing for 10 freaking years, right? So I'm very excited. This is huge. Okay? So now I'm going to go in and just very quickly here for all my private Discord. So in our brain machine, if you want to do it quickly, open up the help menu and go into PT help to look up any price target. And then if there's any upgrades in analyst price targets, you can hit them up here by looking up CLOV, and you can see that so far no price targets have been made in the past 12, like in this 6 months. So keep checking this, and then we're going to be getting an update soon. Now, really quickly, the TTM, which is the trailing 12 months of Clover now, has jumped to $2.14 billion. Just yesterday, it was trading at a revenue multiple of 1. Today, because right here, they just made $874 freaking million in Q1, they're trading at a revenue multiple of 0.5. Meaning that if we want to sustain the revenue multiples from yesterday and on to today, that means the stock price has to, say it, come on, has to double. Has to double from 2.42, right? So which means you're looking right now at a stock price of $4.84, indicating that we are definitely going to see upgrades and rises on the Clover Health stock. Okay, now check this out. I went ahead, and as we were basically looking into, you guys were doing the earnings report, I was dialing in and I was doing an intrinsic value calculation in our Mastering Stock Market course, which is injected in here, which you can find in the link down below at alstocktrades.com. Now, if you look at here, what we basically did is we just took the revenue from 2018 of 281 million to 2022 of an estimated of 3 billion. They said they're going to get 3 billion to 3.4 billion. I'm taking the lower half of that. And they're growing 81%. Now, again, year over year, they're growing 330%. I'm saying right now from their numbers, 81% off of the 3, 4, 5 years, whatever we're looking at. And the stock price that we're looking at based off of these growths, based off of their numbers, and that's only using a 7% estimated free cash flow of the revenue. We know that companies above 5 are great. We already know this company is going to essentially be very healthy. We're doing 7%. And guess what? If they become a SaaS company, you know what's going to happen? They're going to end up doing 15, 20% of the revenue, meaning that their free cash flow is going to go higher because more money is able to get sucked out because there's less overhead because it's data. It's a software, okay? And by doing this here, what you basically see is you get a stock price anywhere between $170 to $384 freaking dollars, okay? The trick is they need to sustain a revenue multiple of above 81% to be able to do that. And we will continue branching out. Now, personally, I am a very conservative investor. I like to take 81% and saying if they accomplish 75% of that, which is 60.75%. So 60.75. Now we're looking at, hold up right here. Give me one moment here. Let me retype it in of what that stock price would be. And that's assuming 75% of what we're expecting right now, which is undervaluing it. Because remember, I said they're going to be growing at 3 billion when they're saying that they're going to do 3.3, anywhere between 3 to 3.4. So like I said, we're going to do 60.75% instead of the actual number they've been growing. We already calculated the average, so I'm just going to drop in the average here. So it's very quick, so we can get in and get out. 470.85. Now the price target, and this is being very conservative, anywhere between $56 to $123. Guys, listen, anywhere you dice it, anytime you take a conservative approach, all you see is an undervalued freaking stock. Okay, now let's talk about the elephant in the room, the S3 that they filed. Approximately, I don't know, $300 million. I forget what it is that they filed, but they went ahead and filed an S3. Legal terms, it basically means that they have and can tap into another share offering. They need to do that just in case if they need it. Now, check this out. Hold on. Check this out. They said they don't have any plans on using it. they're just basically having it here just in case. And what a perfect effing day to do it when the market is trash, when stocks are falling down. Netflix, Upstart, Apple, Tesla, they're all Palantir, they're all dropping. Okay. Listen, guys, everyone made fun of Clover. Everyone basically took a dump on Clover. Now Clover is going to take a dump on everyone else. Okay. No one's talking about this. This whole thing is erecting, and this is everything we need to hear. Okay. They're growing great. There's going to be some deacceleration, but I mean, what do you expect? 300% is freaking high, guys. Okay. I'm not complaining, right? But I believe that they're going to continue growing, and they're strategic. They don't want to let other listeners. Don't you think Bright Healthcare Group is on the call right now? They don't want to listen to give out their competition of what markets they're entering, because guess what? If they publicly say we're going to go here, we're going to go there, guess what's going to happen? Bright Healthcare Group is going to go in there as well. Clover is leading the game. Bright Health Group is basically destabilizing, going out of markets because they didn't do their due diligence. Clover Health they're doing their due diligence, and their software is going to be the mainstream software that multiple healthcare providers can use and will be licensed towards. Okay, so there's that. Now, if you go in and take a look at our we have one of our members here utilizing our, this is our own proprietary, talking about Brain Machine. I created this. It's our own proprietary market analysis utilizing machine learning. It's a software injected within our Discord. If we go ahead and type in DCF CLOV, it shows you the bearish case for CLOV right now at $3.04. Now, again, this hasn't updated yet because it's still showing a stock price of $241. This is only for market open, not for the after hours. Now, the beautiful part about our DCF calculation is it basically enters the new data, and it also utilizes stock beta, which basically helps you within the short term. These price targets tend to hit within 3 to 6 months. Think of this. This intrinsic value calculation is like a satellite imagery system. It's a satellite system that is able to see far out, 10 years into the future. This one here is binoculars. The price targets here will go up faster, okay? So very quickly, based on the revenue multiples, Clover Health is trading at 0.5 times the revenue multiple. Yesterday, it was trading at 1. 7 months ago, it was trading at 9.7 to 12 revenue multiple. If you want to contain the 1, let's screw the 1.4 or 2. If it's 1, that means you just take double of the stock price. It's almost going to be $5, which is going to go into that price target from that other guy from way back when, Canaccord or something. They put a $6, $7 price target. Okay, so there it is. So let's go ahead and answer some questions here. And yeah, that's about it. I might think of something else to say, but I think that's about it. Yeah. All right. Let's see here. Oh, yeah, and that guy with the keyboard, come on, man, give me a break. Seriously, go mute yourself. I'm glad Andrew said something. You know, the guy wouldn't even show himself. He brought his assistant. Same thing with Chase. Chase did the same thing. These guys are going to get screwed. Oh, absolutely. Oh, I'm definitely amped. I am amped. How would you, Clover assistant work for Medicare and where Clover isn't the payer, they wouldn't have all the patient data? Well, that's the thing. If they use the Clover Assistant, they would get the patient data automatically. Reporting all of that. That's how you know Al is getting popular, when you get some spam in the chat. Oh, there's spam? I didn't even notice. Well, thank you for pointing them out. Mooning, huge, smart to not expand into new states until they fine-tune their business. Exactly. Must will be a partner. Oh, that would be amazing. This is insanely cheap. Exactly. Double. You're the man. Oh, yeah, I'm very excited. Extremely excited. The way you're talking right now is giving that's hilarious. I love it. So is the price target for 10 years. And I think my price target's going to hit in the next 3 to 5 years. Once the market condition cools off, the inflation, now just let me before, as I have you here, And our private Discord channel is packed with so much. Let me go ahead, take you to the economic calendar. So if you go to the economic calendar for May, we had our FOMC meetings last week here. This one here, the big one here is Wednesday, May 11th. Write that date down. If you thought that, today was bloody, May 11th may be even bloodier, because again, the CPI data is going to come. Now, if we do see an inflection point for the downturn, we're good to go. But if the CPI is going to go higher, then might as well make yourself a Bloody Mary. But this is good. This is really good. Okay. All right. 4-leaf clover. Absolutely. Is that an ape? That's an ape. Okay. I trust the guy with the propeller hat. I love it. So undervalued. I believe it. Get in, get out. My ex-wife's favorite saying. Everyone treats clove like a poison. Absolutely. They're so stupid. I bought more today. Oh, yes. Did you just use the term erecting? Oh, yeah. Yep. I definitely used it. I mean, what do you look at this right here. That's a nice erection. I mean, that's the only erection in the stock market right now. Here, let me put up on the economic so people can see the economic calendars for this week. Mortgage applications are coming in too, and let's see. And now, if you guys are looking for a house, I don't think this is a great time to buy. I think the housing market's starting to basically crack. So I would say 5 to 8 months, but who knows right now? Everyone's buying off of sentiment. Actually, let me just switch gears really quickly and make sure I want to give you guys the best value possible. So really quickly here, if you look up the smart money, dumb money, smart money is blue, dumb money is red. If you look at it right now, dumb money is selling, let them sell, okay? People in our group, we're not dumb. We're going to be part of the institutional investors, part of the smart money. I get data directly from institutional former hedge funds. And as you can see here, smart money is starting to increase, meaning that it might be experiencing more downturn in the market, but guess what? Smart money's coming in and they're grabbing shares. So you do the same. All right. Another one here, and I think this has gotten lower really quickly. This is the fear and greed model. It utilizes the CNN fear greed, and we can see we're at all-time lows as well. This is when people are fearful. Again, buy when people are fearful. Okay. Also, this is called the bear market for Goldman Sachs. This takes a whole slew of data, such as the U.S. unemployment rate, the ISM manufacturing index, yield curve, inflation rate, PE ratio. The higher the score, the higher probability of a bear market. I do believe since PE ratios are starting to be on a down crunch, such as Palantir and a lot of other stocks right now coming down from their insane revenue multiples, this is going to be good for this because it's going to compress the probability and end this bear market. A recession is the fastest way to end it. The gray is in a recession. So we have all these economic indicators here. I just want to share them with you so you guys are locked and loaded and ready to go. All right. So let's just put this up here, smart money, dumb money, so you guys can look at it really quickly. Oh, just quickly here, the PE ratio crunching. This is the median 70-year average. We could have there's some space to continue to keep going down. All right. Currently holding, not for Clover. I would say other stocks that are high up there. All right, currently holding 8,000 shares. Oh yeah, hell yeah, helicopter hat. I know, right? I know, right? You know that song from TikTok, helicopter. I didn't notice that. I guess a helicopter hat. That's a good. I just got it, guys. All right, have a bunch of puts for Friday 2.5. Hopefully, better grab some shares. Okay, 6. I believe so. The DCF that you show assumes a free cash flow on year 0. Didn't see the expectation yet, but are those so we did an estimated free cash flow by taking 7% of the revenue multiple, and that's an undervalued. So once they do become free cash flow positive, you are going to see a gain like you've never seen before. If you guys think this is an erection, this is nothing. This is nothing. Okay. Let's hope we moon soon, bro. We have suffered a lot. I know. I'm telling you, man, this is like the promised land, okay? The promised land. There will be a time where, we will find the promised land. And Clover, we're going to see it. We have endured a lot. I agree. I agree. A bunch of us reported the spam. Oh, I appreciate that. Thank you. I have no idea. That's why it's probably gone. How much cash do they have? Yes, to answer that question really quickly, how much cash do they have? So if you go down here, and again, this is an educational platform, so we like to teach. So if you go down here, so you go to their report. So you go down here, you scroll down. Okay. Or better yet, you just type in cash. And you're able to find it right here. So this is how you read it, okay? So you go here, you say selected balance sheet data. You go to cash and cash equivalents, okay? And you go here, March 31st of 2022, they have $722 million. Again, these numbers, I believe they're in thousands. So this is, so 700, so you would read this 722 million, okay? But before that, they had 791. So to see the loss, you would take 91 minus 22. So they lost around $69 million, okay? Which then you can go up here and you can look at the net loss, which is right around there. You know what I mean? So I hope that was, pardon me, helpful in reading these things, okay? They're very easy. You just got to get used to them. In our Mastering Stock Market course, we'll be teaching all about this, how to read it, annual 10K reports, 8K. The Brain Machine will help you get those papers without having to go to the SEC. All right. So I was conviction stock. Hey man, I'm very excited. This is a good one. I'm very sad about people that dumped it a long time ago and never going to look at it. They don't understand what they're missing. Glad I got some more. Oh yeah, easy. You got Clinton. You got Clinton shares right there. Clinton price, right? Clinton special. Oh God, RIP. I need to analyze Upstart. House. All my money is wrapped in. Me too. I'm about to start pulling out. I actually started pulling out of the energy stocks that I have. I recommended some energy stocks for our private group here. I don't know if you guys are on here. Just make sure you check these. A while back ago when IREF was trading at $4, I set a $7.50 price target. It hit it. So make sure you follow this. If you follow my trades here, we're up 75% or 73.75%. So make sure you follow this. I'm starting to move my money out of energy. Okay. Let's go back here. I have a good bit of CLOV. Market might turn down tomorrow for CPI and we lose these gains, but long term, we're good. If you want to play the short term, go for it. Long term, we're good. Oh, good. Okay. Yeah, for sure. Any news on EPS? I got to take a look at it, possibly have to calculate it, but it's looking pretty good. I need to do some calculations. Hell yeah. What would you say, the naysayers and FUD? Oh yeah, you know what I'd say? Never judge a book by its cover. People trash Chamath. Chamath's a hardworking immigrant. He came into this country, worked his ass off, and very hardworking young man. Bought Bitcoin when no one was talking about it. Open Door just did good earnings. Don't underestimate this man. He's a good, hardworking individual. The people at Clover, and the naysayers are going to be the naysayers, but I think he deserves more credit than what society gives him. Okay. Hey, Al, did you calculate the EPS yet? No, I have not. I'm going to probably do another video about this. But other than that, we're good. I'm just answering some quick questions right now that are easy to answer. Anybody got a resume of what Al has been talking about so far? Just joined. We will, for our Al Stock Alerts, which you can find at alstocktrades.com, we are going to be giving a video tutorial on how to use it. You essentially have a Bloomberg terminal. I've pretty much injected around $30,000 to $40,000 of material in there, and other stuff that, like for example, the hedge fund information and everything, and all the artificial intelligence technology. We'll be giving a tutorial on how to use it to fully maximize your earnings. Okay. So status of profitability. So they are going to be achieving profitability by 2023. That's what they said. I think it's 2024, but based off of these numbers, I think it's going to be 2023. And this is going to be great. And once they get to that profitability, their free cash flow, we're going to be able to calculate the percentage. If they're giving anywhere between 10 to 12% of free cash flow versus the 7% that we've been calculating, all the naysayers are about to get whipped. They're about to get whipped. Oh, yes, please hit that like button. Clover Health is the new Tesla. Amen. That'll be amazing. I think the gains that you guys are going to see is going to be phenomenal. The gains are going to be quite incredible. Let's just say here, based off of these calculations. And this is an $123 is an undervalued calculation. As you saw, they're growing 81%. At 81%, it hasn't. There you go. At 81% is $389. So let's just call it right now, 350 minus 2 point, I don't know, 2 point, what is it? 2.72 right now for the price is 347. I don't even know. That's a 12,000% gain. Now let's assume it's. Guys, this is incredible, and this is extremely bullish. If you want to just be a conservative with the 61%, you can do this. 125 subtracted from 2.72 will give you 122. We'll do 122. 122 divided by 2.72. That's 44. We'll call it 44, even though we should round up. 44 multiplied by 100. That's a 4,400% return, right? Do the math. What is that? 44x your money, right? You put what? You put like what? $100,000 right now. You would get $44 million. Look at that. Look at that. Okay. All right. So 2023, or I would say to be more conservative from the market, people are underestimating the Russia and Ukraine with China. There's going to be giving us a headache for quite some time. I think 2025 is going to be a good year. They're trying to push out this recession. I think they should just deal with it right now so we can get a good one. If the recession happens quickly, then 2024 will be good. But if they push out the recession to 2023, 2024, then 2025 will be good, which is what our price targets is for. Do they report customer acquisition costs anywhere? I have to take a look. That one is a good question. That's a good question. You can calculate it. I like that. They didn't say about SaaS offering, did they? They did not. They did not talk about the SaaS. Now, I don't know if this is a legal thing they can do, that there's a way to not allow them to say it. There's like legal things that you can hide because of competition, but they would have answered it. They did basically say that they are going to end up doing this. And if you look at the investor relation page, the SaaS for Clover, it is within their future. As you can see, this is part of their investor relationship. The Clover Assistant will be in their long-term SaaS part of it. So they are going to utilize this, and other healthcare consumers are going to be using them because of this criteria for health equity. CMS might even tap them in, and it might even make this the all-one experience. And if that's the case, it's going to be majority of the people in our Discord are going to be millionaires. It's pretty much multimillionaires at that point. Okay, so is there a lot of upside in the terms of revenue? Oh, hell yeah, I agree. This was a SaaS, or shall I buy SoFi tomorrow before earnings? I'm not too sure. I need to take a look at SoFi. I need to look at them. I haven't looked at them as deeply as I have with Clover. Beautiful quarterly results. Credit Suisse seems to not be ready for it. They were not ready. They were not ready. What did they say it was going to be? They said for the slowdown would possibly be the revenue, because a lot of people entered into the beginning of 2022. But 300% year over year growth is pretty high. I would say they might slow down to 150, 160%. We'll see. It's because you have to understand, direct contracting came online for Q2, Q3, and Q4 of 2021. So it's not. It's like them competing. It's like Tesla. It's going to get to a point where Elon Musk can't compete with himself. I mean, if you're pushing out these many cars next year, it's going to be a problem, right? So with this whole revenue thing, it is going to slightly go down in terms of the revenue year over year increase, but it's still, I speculate, is going to be higher than 80%. Oh, wow. Dating side. Oh, this is the spam you guys were talking about. Okay. I mean, when are you going to be profitable? I mean, I would say my calculations is 2024. So I'm a little bit conservative. I would say later stages of 2023. Third and fourth quarter. Oh, he's back. Where is Albal? I was wanting. He's my first hater. I love him. What's the 2-week price range? I would say the 2-week price range in this market anywhere between $3 to $5. Appreciate your vids. Got to head out. Yeah, I'm gonna head out too, guys. So Kirk and so Republicans have to deal with. Yeah, so that's what it's looking like. Just push it out until there's a red wave coming, then there's a recession, and then they blame the recession on that party, and no one fixes problems. They just continue doing the blaming, which just sucks, you know. I got some attendees that need to print. Hell yeah. Should we expect a price drop on May 11th? Yeah, for the economic calendar for the CPI, possibly. Well, all right, guys, it is a privilege and honor. I went through all of your comments. Just if you would like, here is our, let me show you really quickly. Here is, well, you guys can't see that here. Let me open it up here. In fact, let's just look at the price here really quickly. So we do see a reset on the MAC, and yeah, so we could be going up from here. But we'll see right now. So here is Al Stock Alerts. If you want access to the Mastering Stock Market course, it's lifetime access to Al Stock Alerts, and it includes the intrinsic value calculation in which you saw me. Now, if you want access to our Al Stock Alerts, we have been featured on Bloomberg, Market Watch, NASDAQ. Yes, we've been featured on the NASDAQ. Al Stock Trades, right? Benzinga, Yahoo Finance, and Yahoo Money. The results speak for themselves. Our people, our members are making money in this economic downturn, okay? Like, for example, today, our members went ahead and traded SQQ, right, which is short. And if you go to here and go to profits down here, you can see one our members here right then and there. They're up total return $1,000, 474% on the market of Sea of Red today, right? So we have a great community, great people exploring trade ideas. And here's what's inside. You get access to dark pool data, algo flow, heat maps, so many different types of things, and our proprietary full access to our brain machine, as well as our my buy and sell alerts, and also my top short squeeze stocks, all for $11.99 a month, or as low as $10 a month. There'll be a link down below, or you can go to alstocktrades.com. Other than that, I'm just a very quick shout out to Bloomberg here. Thank you, Bloomberg, and all the news anchors and articles that have been pumped out to support our mission, which is to provide access to financial information, democratize it to low and middle income groups. It's kind of annoying and boring now that the rich keep getting richer and the poor getting poorer. Very quick example, and I'll leave you with this very quickly here, guys. You remember when Elon Musk wanted to buy Twitter? He gave him $54.20. Goldman Sachs said that's too cheap, but then they forgot that a couple months ago they hit a $30 sell rating. Why do you think they did a $30 sell rating? You think it was for them? No, it was for fucking retail. Excuse my language. It was for freaking retail, right? They want retail to sell so they can buy out the shares. All right. They successfully trashed the crap out of the Clover Health stock, but it's okay. It is okay. Don't worry. We're going to get up there. At the end of the day, the fundamentals will always come back to the stock price. I don't see a stock going up 331% year over year and being traded at 0.5 the revenue multiple. I don't see that, okay? This is so cheap. They're bringing in more money than the freaking market cap of the business. I mean, come on, right? This is cheap. All right, so God bless each and every one of you, and stay safe and invest safe, and always remember to understand the fundamentals of the company. Understand how to evaluate a company. It'll ignore all the bullshit noise that you see and all the other YouTubers that try to pump stocks that are not winning. These short squeeze candidates that we also have that are terrible stocks. But if we use our AI, it helps us trade. But for long-term investments, you got to find stocks that are right between that jumping point between non-profitability to profitability. And I'll be talking about that in our Mastering Stock Market course, because that's another way to find multi-baggers. All right, guys, that's all I have for you today. God bless each and every one of you. This was a long live, an hour and 43 minutes, but we're dedicated. We want to give you and provide you the best freaking stocks in the market. So God bless each and every one of you. Stay safe. Bye-bye. Wait, I got more comments here. Thanks, Al. God bless you. And I appreciate you, Kate. Thank you for calling out that Reddit SaaS question. Thanks for all the work. Do you offer a preview of the course to see? We don't offer a preview of the course because it is in beta access. It will become $2,000 by the time we're done. However, we do offer a Al stock alerts here for $11.99, or if you get the yearly plan, it is $120, which is $10 a month. So for just try this out for 1 month, and if you try it out for 1 month, and if you don't like it, you can always cancel, and it's like what, a $12 loss. But you're gonna love it. You're gonna love it. I've undervalued the crap out of this. This is but if you like our methods, if you like our teachings, this is how the Discord looks like. We even have a voice channel that we added and all these things, but there's just a lot. There's a lot. There's so much commands here, so much research. And there's also this artificial intelligent technology, which gives you buy and sell signals called Bullseye right here, which tells you what to buy and sell. You see golden puts or golden sweeps, basically tells you what big money is doing. Also, you get a cheat sheet, which will tell you what the Federal Reserve is going to be doing before the Federal Reserve does it. Just a lot of information here. Senate and House of Representatives insider buys and sells, as you can see here, what they're purchasing, like Intel. And I know someone who's a computer scientist. He's telling me something about Intel and the government working together. So we'll see what happens there. And I guess it's not insider because I just heard it from far away in a coffee shop. All right. So hopefully this might come into fruition, our Intel price target. But other than that, guys, it's a privilege and honor. God bless each and every one of you. And this is good. Good earnings report. Peace out.